Today we want to give we want to analyze GBP JPY pair, and I think they will be my first time I'm gonna trade this currency as come from next week, because we are looking forward to trade it because it has some good opportunities, as you can see. The first thing before you start trading a pair, you have to look at what trend the pair is in. For example, you can see this is definitely going up. The market keeps on making those higher highs and higher lows, going on an uptrend, which is very important. First, you have to analyze what trend is the market in, and if it's on an uptrend, definitely always have at the back of your mind that all your executions are going to be buying and buying and buying. If it's on a downtrend, then definitely you're going to execute sell orders. If it's on a ranging mode or consolidating, then definitely we are going to consider either the support or resistance zone. We're going to sell at resistance zone, we're going to buy at support, like that. If either the market breaks, or rather the market breaks the support or resistance zone, we are going to execute orders based on what the trend the market is giving us. So this is GBP JPY, Great Britain Pound Japanese Yen pair. We're going to start with the 1 day time frame. We're gonna see what kind of trend the market is giving us. So this is a GBP JPY. Closely, or rather when you just have the structure, you can see the market is on an uptrend. And then we're gonna zoom in onto the last candlestick that was formed on Friday before the week ended. So if you consider this last candlestick, you definitely see that it closed above Thursday candlestick that was bearish. It closed above this candlestick, so definitely we are on an uptrend or bullish. So we have to mark the highs and the lows of that Friday candlestick. Highs and lows of that candlestick. So our high will be up at that particular point exactly, and our low would be at that point. So let's now narrow down to 4-hour time frame. You can see it clearly. So now this is what we are now looking forward to. Whenever the market passes either of the this resistance zone going upwards, we have to wait for the market retrace to either the point, or come to this previous resistance zone, or come to this at this point, this demand area right here. When the market passes this lower horizontal line, rather the support, we're gonna wait for the market to retrace to this point, or come to this come to our supply area up here, is we're gonna execute our order. So right now, what we are looking forward to, and our area of interest will be at this point right here. Our area of interest, since the market is on a bullish trend, so the back of our mind, we know that any order that we're going to execute as from now onwards would be a bullish order or buy order. So this would be our area of interest. Now whenever the market comes to this area, whenever the market retraces to our area of interest, remember now this we term as the demand area. When the market retraces to this demand area, we're going to wait for confirmation, and then we execute our orders, putting into consideration the risk reward ratio. So definitely we're going to put our stop loss below this area of interest, and then our take profit one will be at this previous resistance zone. Our take profit 2 would be at this another resistance zone. So whenever the market passes this resistance zone, we're gonna now put our take profit 2 at that point, or rather we can still hold that entry, or rather that trade, and put our break-even point at that particular zone. So that's what now we are looking forward to. Whenever the market would retrace to this area. Let's go to 1 hour time frame. 1 hour time frame, yeah, definitely you can see with 1 hour time frame, market came to this resistance zone, and it got rejected at a particular point. There was this projection candlesticks you can see here, the dojis, yeah, the spinning tops that are being formed at this area, giving us confirmation that the market is now getting, the price is being rejected at this particular point, and this is very, very significant. And at the back of our mind, we know very well the market is on a bullish trend, so there's a possibility the market would come to this demand area and then give us confirmation that it's now ready to go up. Another thing we can consider now, look at the trend line. Our trend line, remember, on an uptrend we put our trend line below is recognizable resistance. In an uptrend, sorry, we put our trend line below easily recognizable support areas, in that when the market comes down to those areas, we definitely would look for a buy order at the area, or whenever the market passes our trend line going downwards, it would give us signals for a reversal, and then we would trade that particular trade, rather that setup conservatively. Conservatively in the sense that when the market passes our trend line going downwards, we wait for it to retrace to this zone, give us confirmation for a sell, and then we're gonna execute that particular order. So as coming from next week, today is on a Sunday, the market is definitely opening at 12 midnight, and then we are now waiting for these zones to be either passed or market retrace to our demand area, execute that long position, put our trade considering risk reward ratio of 1 to 2. Yeah, so that's what I'm looking forward to. So in case you're new here, press for me the subscription button and that notification bell to get notified every time I'll be dropping a new video. Thank you.